Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday the 18th, and we had another pretty positive week for equities. You take the semiconductors, which were down 2% as the exception, along with energy names, which you guys know what I think about energy names. Oil was down 9%, so I think you got lucky only losing 2.6% in your energy stocks. Let's take a look at these charts and make some sense of it. We remain in a major uptrend in the S&P 500. We saw a pullback right to the rising 5-day moving average. And that's where buyers stepped in, kind of where they're supposed to. They got back above the weekly VWAP, held that VWAP, and closed pretty much at the highs for the week and forever. So the bull market remains intact. We get we turn a little neutral over here, back to bullish and remaining bullish for now. We're a little bit extended, so just be aware of these higher lows and know where you're protecting your gains based on whatever your particular time frame is. The Nasdaq is a little bit, just kind of digesting gains in here a little bit more through time than anything, as I pointed out to subscribers at least. And that Alpha Trends on Twitter, the subscription for $10 a month, it's such a bargain. You get this type of analysis twice a day, actually. Stock picks, crypto names. It's really kind of crazy that I'm doing it for 10 bucks, but we came down to the rising 20-day moving average and the month to date anchor. That's that blue line and the anchor from the prior high. Buyers showed up exactly where they were supposed to, which is why I don't get bearish below the 5-day moving average when we have a primary trend higher. I just get a little bit cautious. Now it looks like this is going to be a key level for this market to hold over the next couple of weeks. And shorter term time frame, I think you can measure risk against this higher low. The Russell 2000 kind of ran away, and it did so without me. I was looking for a pullback before I got involved. I didn't want to chase it. That's my discipline. As I've pointed out, I have zero FOMO for not owning this. I've had plenty of good stocks to trade. I don't need to own the index, but if I'm going to trade this index, the way I want it to set up is something along the lines of this. That we have the anchor from this little shakeout low a couple weeks ago. I'd love to see this market kind of start to see a little bit of a pullback in here, come down maybe even slightly through that level, turn sideways a little bit, let this 5-day moving average do something like this, and then maybe middle of next week, it would be a purchase with a higher high above the flat to rising 5-day moving average and a stop below the most recent relevant higher low. If instead the market continues to move higher, that's fine. I've got stocks I can trade. I don't need to trade the Russell 2000. For now, the buyers are in control. The weekly time frame, you look there, and we're in this band where we've had prior supply that is making it a little bit difficult to get through. The semiconductors, they did, as said, I said, see a little bit of pullback in here. We had that ASML news, and then we had that TSM news. So a lot of news in this market this week, and it brought about a quick sell-off here. So there's clearly some nervous money in the semiconductors, but they came right back. But we are below a declining 5-day moving average. So a little rest for the strongest group out there is certainly okay, in my opinion. On the daily time frame, we have this pattern here. We have this low, we have a higher low, we have this higher low. So this is the most important higher low for now, and that's where we have that 20-day moving average. I'd like to see this market maybe just kind of settle down a little bit, squeeze a little bit of this volatility out of it, and then maybe late next week it can resume its upside. But for now, I don't think there's really great opportunity from the index level, at least. Individual stocks, there's always a different story. I'm still looking for hopefully a little bit of pullback in the biotechs. I'd love to see, I don't think we'll get it that deep, but maybe down to the anchor from this low. So, kind of the same story I just uh, drew out for the Russell 2000. Maybe we see something like this. This would be ideal. If this were to happen, I know that I would get aggressive over here with a buy, with a stop, worst case stop under a higher low that looks like this. Because the weekly time frame is really the prize that we're keeping our eyes on. We have this big move. If we can finally break from this, it should be relatively easy for this market, I think, to rally up towards that 120-ish level. That's where we have the potential. Right now, though, again, I don't chase these markets. I want to see them correct. I want to buy them on my terms. That's what a disciplined approach is about. Financial stocks, they just continue to chug to new all-time highs day after day. The bonds, as I've mentioned, they hold these VWAPs really well. This is the one we've been talking about off the 2021 high, and then we came down to the anchor from the 2023 low, bounced off of that on Tuesday, and we came right. And I warned people, hey, tighten your stops, be where you are. We're at the month to date anchor, and that's where I thought we would run and then pull back. And to me, they're just untradeable, similar to energy names. Energy, we got a bounce in there, but we're still in a messy, messy range. Oxy got a little bit of a bounce, and then it did what it's supposed to do. It failed at the declining 20-day moving average. Don't buy stocks because Warren Buffett is. This stock is still in a major stage 4 downtrend. Bounces will occur, but make sure you take your profits if you're getting involved in them. Let's talk about the crypto space. As I mentioned a week ago, this is where we were last Friday. In last week's video, I said I want to see it pull back and then I'm going to get aggressive. I went all in on my crypto account right here. I continue to hold all that. I also was talking about Ethereum, it's not as exciting to me. I think that if we can probably get a move up towards this prior band of support and the anchor off of the high from May. That would bring it up towards about 2,900. So 300 points. It's not, it's still a nice move. It's 13, 14%. But the one that looks best, and I actually transferred more money into my crypto account, is to buy some Solana. I've been talking about this inverted head and shoulders pattern here. Go look at Twitter. It's approximately 35 points from the head to the neckline. Well, if we break out past that neckline at 160 and we had 130, I'm sorry, we had 35 points, that would give us a measured move objective up towards this high of 195. It looked like it was going to do it early in the week. It pulled back as it rallied here. This is where I transferred more money in. I'm involved at 153 and change, basically right here. This is a half size position for me. I'm transferring more money in because if we break past this level, I'm going to get aggressive for this 35, for what I think could be a 35-point move. Right now, my risk is down to this point. If you're following me on YouTube, give it a like, subscribe to the channel. Go spend $10 and see what you get every single day on Twitter. It's an amazing deal. Have a good weekend.